Welcome to Smart Finance 360, the podcast where money matters meet innovative thinking. Every week, we dive deep into the world of finance, exploring trends, debunking myths, and bringing you the latest insights from industry experts. Whether you're a seasoned investor, a financial newbie, or somewhere in between, this is your go-to source for becoming financially savvy. Okay. All right. Welcome to another podcast of Smart Finance 360. I'm excited to have Kelly Sylvester here. Many titles because you've done a lot. I would say here, you're a construction attorney, real estate developer. You've been in escrow and title. You're running for the county recorder.
Seems like a buffet, right?
A buffet in one really distinct great area. So, I'm excited to have you on because today's specific. We're going to talk about ADUs. Now, we all know ADUs are accessory dwelling units. And basically what that is you have a property. Let's say you have a house and you have additional dwelling on that property. And we want to dive into the stories of ADUs, a lot of different rental options, but you are the expert on ADUs, Kelly. So let's just dive in real quick and let's talk a little bit about ADUs.
Thank you, Kyle. I don't know how much of an expert I am, but I definitely have been following this from day one. So I think it was 2019, one of the Utah House of Representatives, Representative Ward, Raymond Ward, and I were talking about how wonderful it would be if every basement in the state of Utah, or at least along the Wasatch Front, was able to be a basement apartment to allow for more rentals. The problem in Utah, as in many states, is that there is a shortage of housing.
Yes.
Okay? So the question that we asked ourselves back in 2019 is that, well, we don't want duplexes everywhere. How do we avoid having R2 rezoning and all of that? And the legislation was put forward and pushed that there could be a statewide mandate that instructed the cities to adopt in their code the ability to have additional dwellings, whether attached or detached, as a part of the footprint, and to allow that without having planning and zoning and local city ordinance issues. And so when we passed that, we were, all excited. Look, this passed. This is great legislation. And then nobody knew what we were talking about. Mm-hmm. And we went to the cities and half of the staff didn't know what was going on. And we met with their city attorneys or planning and zoning and said, this went into effect. How is your city adopting this? So I had the chance, I call it a parade of cities, but I went on a parade of cities to visit each of the cities to find out. And what I discovered was in Davis County, some don't allow for detached accessory dwelling units. So even if you had a detached garage and you wanted to put a studio apartment upstairs above, you would have to, in certain cities, you wouldn't meet the requirement. So after going through several of these parade of cities, visiting and meeting, I realized that we were going to have to educate the citizenry because the cities weren't going to do it. And it wasn't that they were hostile. It's just they weren't prepared to make that transition, because some cities have ordinances or in their code to allow additional dwelling units. In West Point, for example, you can have a detached one. And in Clearfield, for example, you can't have anything but a basement one.
Really?
Bountiful, they have a little bit more liberal than some cities, but the problem with Bountiful is that they don't allow for additional parking. They don't let you pour additional
concrete for that or anything.
And so unless you have like a half circle driveway or you've got the RV pad next to you that will allow for that, then there are some hang-ups there.
Yeah, I've had in the past. I had a house in Layton, Utah. I was able to have the basement rented out when I lived there, but the moment I moved and it was now a complete rental, the city got me and said I couldn't use my basement as a rental. This was years ago. I don't know if it's changed, but I didn't know that. It would have been really nice to know the city code at the time, because I was really planning on to have that to be a two-door, house. I wanted to rent the upstairs and the downstairs. And I don't know how it changed. How did the cities, when they learned more about this, were they kind of open to changes, or what was your experience there?
Yeah, so the cities seemed, as long as they were able to still control their large city plan, city planning where they have the blueprint of the plan of the city, as long as they had certain say about density and about the ability to control for the application process, then it would be, I think they consider it case by case, even though it's not, but they treat each application as case by case. So I guess the first message to people who are listening to this podcast is that cities have applications that you fill out, which includes some of the requirements. And once that application has been approved by the city, then you're free to go ahead and make your improvements for this additional dwelling. And then that actual agreement records on title and runs with the land. So people always tell me, well, is that a legal ADU? And I'm like, well, it depends on what your definition of, if I put my attorney cap on, I'd say, well, there's no record on title. So did you actually go through the city, get it approved, have the permit process done, and then when it was completed and the city, ceremonially records this on title, I can search title now, even after you were to move, let's say in your situation, and that accessory dwelling unit would have been approved by the city and codified in the title report. So that's part of the process that a lot of people, they're leery of, but what it really requires them is to know their city, know the city ordinance, or at least people at the city offices who can give them the forms and kind of answer their questions there.
So there's opportunities there, and that's the first step. Get your ducks in a row there. The second step that we wanted to focus on is everyone knows what an ADU is. It's what's the purpose of it? There's so many benefits from it, so much savings from it, because especially for first-time homebuyers right now in Utah, I would say the average purchase price, what would you say, is in the mid to high 400s probably throughout the state. That can get expensive for a first-time homebuyer. What's great about having an ADU is that can offset your mortgage substantially. So let's talk about the benefits for first-time homebuyers utilizing an ADU. What have you seen lately in the market of different scenarios that have helped first-time homebuyers?
That's a great question and a great lead-in. So the ADU was originally created to help someone have a spare apartment to allow there to be affordable housing or more accessibility to housing. And now what we've discovered since the 2019, since the statute went through, is that we still have a housing crisis. We still have a housing shortage. We've built a lot of density in a lot of condos, apartments, and townhomes, but we really haven't, again, focused on the single family dwelling. The first time home buyer is still not getting what they need to be able to, without a market correction, be able to afford a house. And so now the push for the ADU message, one of the reasons why we're having this podcast is that we want homeowners, especially first-time home buyers, to understand that the benefit is win-win for you and the potential tenant.
Yes.
It isn't just for the tenant. And the reason I say that is that right after it passed, a lot of people saying, well, we don't want anybody in our basement. This is our home. And it's not. And it's like, well, then you're definitely not a person for this scenario. But when you just mentioned, I've got a scenario written down on one of our sheets here.
Yes, let's go over that.
If the purchase price was $750,000, okay, so that's an upgrade from a starter home. Someone's about ready to, and they're going to put 20% down. So 20% of that $750,000 I've got here just rounded up at $150,000. They got a mortgage of a payment. Their principal and interest, taxes, and insurance is $4,100. I don't know about you, but
it's a lot.
I can't afford a
$4,100
mortgage payment. But if they had an ADU and they had gone through the process and it was approved and it was valid, legal, and it's recorded with the property, then their estimated ADU monthly rent for a 1 or 2 bedroom would be $1,500. And that's pretty good for rent. Really good. Right? I've seen them $2,100.
Yeah.
So the estimated monthly payment is no longer $4,100. What is it now?
That's $2,600.
$2,600 for a $750,000 home, and you put $150,000 from the house you sold. You have a 30-year mortgage, nothing, no harm, nothing special there. $4,100 less the ADU money rents makes it $2,600. Now
that's phenomenal. That's like going back in time when rates were historically low.
And so, don't you think that would be a sales pitch in and of itself?
I mean, a lot of times people don't understand. They're so focused on the interest rate, but really what they really care about is the monthly payment.
Yeah.
This kind of takes the interest rate out of the situation. Obviously, interest rates are important. Yeah, I'm a loan officer. That's all I'd look at. Right. But if you're really trying to get that monthly payment to a certain, right here would be $2,600, right, this is the way.
Right.
It's the way. And you're immediately learning how to be a property manager, or you can get a property management company to help you. I got a property management company to help me. It's amazing. But it helped you not only become a homeowner, now you're an investor.
Right.
So there's two things here that helps you in your pie of, I always like to say, of your pie of how you're working on your retirement. You already got two now. You got your house, and you now have an accessory dwelling unit as an investment. So that's cool. Tell me a little bit about the scenario 2 here, and let's compare.
Okay, so scenario 2 is more, will an ADU help me qualify for a home? That's basically the question. My question, I've kind of done a subset of that, and I've said, does the ADU help you qualify for more of a home? So scenario 2 says, this person has an income stream of $99,000, 10% down, 6.5 rate for 30 years, taxes at 5%, insurance $700, probably low there. But let's say that the rent for this scenario would be $1,395. Okay. Without an ADU at $99,000 and the qualifications, we're not going to try to, pick and choose a special program here, but let's just say, for sake of argument, without the ADU, this buyer would qualify for $571,700. Okay. So principal, interest, taxes, and insurance is $3,649. And that's a little lower than scenario 1 that we had, but notice how much our house is almost $200,000 less of a house than the scenario we just talked about. Now let's take a look. What is it if I were to have an ADU and all of the factors were the same, 99K, 10%, 6.5, 30 years, what would I qualify for if the house had a legal ADU in it? What's the amount?
So you're only paying now, it's going up. Your payment's going up from $3,649 to $4,079 total. But then you have that net housing expense with that ADU now at $2,684.
Right.
So you're basically going from a $570,000 house, you have to come up with $3,650. But now you have a much nicer house, and you only have to come up with $2,680.
That's the point. Is that the value, the amount of the qualifying for the amount they qualify for is more with an ADU. Same income stream, but they qualify for more with an ADU, and they pay less. Qualify for more of a house, pay less of a mortgage payment.
So the lenses that you need to look at is, because like you said, maybe they're like, I don't want to rent it downstairs. Well, what if the house is much nicer?
Right.
I have a brand new kitchen.
Right.
I have a really nice laundry room. I have an extra bedroom for my kid upstairs, and now I have an ADU. That's a great way of looking at it. It's not just, I think, obviously, it's amazing that your expense is much less. Now let's talk about the tax advantages of what you would get if you had this ADU compared to without.
Right. So most people who don't own property, who are renters, don't understand that the mortgage interest they pay at the beginning of the loan is so much higher than the principal, and then halfway mark, they call this amortizing, and it comes down, and by the time they're at their 28th, 29th year, they're paying more principal and less interest. So the first 15 years of a mortgage are a tax benefit to people because they're able to write off that mortgage interest and the property taxes, especially on 700 plus homes. So the tax advantage, if you were to buy a home versus rent, so this is something that you mortgage can sell this all day long. The difference is you're able to not just pay yourself, you're paying into your own equity. Even if it's minimal at first, it's going to eventually escalate. But in this situation, they get both the mortgage interest and the property taxes on their Schedule A as far as their taxes, and it's a tax benefit. So owning property is a tax benefit. Yes, you have property taxes you're paying, but your income tax benefits are phenomenal. Now, a property owner with an ADU not only can still write off the mortgage interest and taxes, they also can write off the insurance, maintenance, repairs, depreciation. But wait, there's more. Utilities, cleaning, supplies, travel, legal expenses.
Yeah, that's great, especially for this person right here. They make a little less than 100,000.
Yeah.
That's going to be really nice for their tax returns.
It becomes a Schedule C, and they're able to itemize these kind of deductions. And it's not itemizing every other year like the standard deductions and exemptions in a 1040 tax form. It's now, hey, I am a property investor. I'm a property manager. As long as I'm managing my own property, I don't have to have a real estate license, but I can manage my own property, and all of the things necessary for me to have a mini business in my basement, renting out to somebody, I'm able to take advantage of those benefits on my Schedule C. So the tax advantages in accounting, they call this above the line tax information for the mortgage interest and property taxes, but below or Schedule C would be all of these additional things you're writing off. So people who always claim other people are tax frauds and tax cheating because they're writing off stuff don't understand that when you operate a portion of your home as a business, it isn't just the square footage that's measured like 1040 normally.
Yep.
You're able to get all of these tax benefits because you're spending that money. You might as well get a tax benefit out of it.
Yeah, I think overall, it's just a phenomenal, you're just elevating everything when you're buying with an ADU. You got a better purchase price, you got a lower payment, you're getting all these tax benefits, tax advantages, and you're learning as well. It can also help you learn if you want to become an investor and buy more properties. We already have it was great for me to do that because I already knew a lot of the pains. Like, for example, I had to replace a water heater. I should have known a budget and stuff like that, but it was great that I learned that so that when the future, when I did buy investment properties, I was able to understand a lot of not only just the tax advantages, but the pros and cons. It's just a really great way to get baby steps if you want to end up becoming an investor as well. And if you don't, it's really cool just to help you have a lower expense and still take advantage of the tax advantage. Lastly, I want to talk about is the great advantages you can take with renovations. So let's talk a little bit about kind of the renovations and ADUs. You got a great list here of things that...
actually, the list came from your
Did it really?
CE you had on Monday.
There you go.
So shout out to you, Mortgage, hosting an incredible mortgage matching your needs.
It was great.
Yeah, and brought some people in that helped us out and understand some things. So I was excited, and I didn't know when I came there would be anything with ADU. I was just, here, got the invitation, ready for my Cafe Rio lunch, and all of a sudden ADU starts showing up and I'm sitting at the end of my chair. It's like, you're talking my language. Yes. So part of what was very beneficial from listening to that was that we had mortgage information for real estate agents, but it's how we can disseminate that information and proliferate it to other people that is going to be the difference. Just because you intellectually know something about an ADU, it isn't until you actually get involved in the process that you're able to see some of the benefits and the windfall. And since I had never done a renovation loan, I didn't know that there were going to be ADU benefits. So some of the stuff that I got off the board here at that Monday meeting was this allows the borrower to purchase a home and add the ADU in one loan.
Yeah.
Wow. No HELOC, no second,
Yes.
no equity from not able to use the equity from a previous transaction. Instead, it's like, hey, I can have a loan for my home and an ADU improvement priced in it in one loan.
Yeah, that's huge.
One closing.
Very nice.
One qualifying.
Very beneficial.
Exactly.
Very smooth compared to having to do two underwriters, two sometimes companies with...
Yeah, and having been into construction, I have these construction to perm financing all the time. And there's the problem of if you're in between construction and perm financing, I file a lot of mechanics liens, a lot of construction liens. And so there's a caveat that if you're going to have a construction to perm, you better give yourself some wiggle room. We call it sometimes in the business retention, but you're not withholding retention. You're saving that for this process. And so to be able to not have to worry about financing the house without the ADU, that's the point.
Yes.
Finding the house you want that doesn't have the ADU, but has the footprint and the ability within that city code requirements to do that.
Huge.
So this is something we didn't mention at the beginning, but it's perfect now. It's a single family residence and it's a primary residence only. So I can't buy an investment piece of property and not live in it and have an ADU, then it would be a duplex, and or you would be non-conforming because the way they were able to work this, especially with the statute, was to be able to provide owner-occupied benefits and the owner-occupied management of the property too. So it's not a slumlord situation or an absentee landlord situation. You're right there. Owner must, what does it say here?
So basically, it must be owner-occupied purchase. So your loan-to-value is based on the lesser of the purchase price plus the renovation. So basically, it gives you after-improved value on that. That's huge. That helps a lot for your loan-to-value, your appraisal goals that you want on the home. So that helps a lot. And we'll go through this really quickly here, but a lot of things that people need to understand, they're going to be, for this loan specifically, it's going to be single family. They're not going to want a modular or manufactured home. That's not going to be permitted. And then the one thing that, like you said at the first of this podcast, it's always good to get your your ducks in a row.
I think it's good to get your bucks in a row too.
In a row and ducks in a row.
Exactly.
Thank you.
Dollars
and your ducks in a row, so that you can, permits and zoning can take up to 6 to 8 months. So it just depends on that. Now, one of the products I really liked is the home style and choice renovations. Those are great because they allow freestanding or attached ADU. So that's one where it's like one product may only allow detached. This one actually will help allow you to have.
So if you're in the city that you're lucky enough to have a detached one, that's
yeah. And then the last three here is the standard 203K loan allows only ADUs attached. So if you want to do a 203K loan, which is a different type of renovation loans, what's cool about this is there's 3 or 4 different types of renovation loans that are offered out there. So when you talk to your licensed loan officer, they'll let you know which one works. But it's going to be this 203K, which is very popular, is going to be just attached primary properties. And then appraisals must have one like comp with an ADU. So that's going to be big in the area. When this is getting more popular, more comps, it'll be a lot easier.
Yes, we definitely need more comps. And so a message to the real estate agents that are out there is that in the MLS, we need to put it in there that it is a legal qualified ADU at least even in the comments, because as the appraisers and others are looking to compare and measure, if it's built into the language of that, they can rely on that. And they can go back and say, hey, this is a property that's sold. According to the MLS, we do have notes that say that this is a legal ADU. Looking at title, the document that's recorded, all of that. So
yes. And then, it's just really great that as loan officers as well, we do make sure that we have certain scenarios where it's definitely an ADU and it's not recording like that, or it's not at the end, the underwriter is kind of a little bit confused about it. If it definitely is an ADU, we make sure we do the right, correct paperwork to make sure that this thing will be there for the future, because we want that.
And what's beautiful about that is that there are plenty of apartments in homes that aren't qualified ADUs. And so with the renovation loan, we're able to cure unqualified or illegal ADUs by bringing them into compliance.
Yes.
And so one thing that Ruby and I were talking about is that if one of the disadvantages for a lot of people is the cost of concrete to pour a separate entrance, the stairs, the basement, separate entrance type of a thing. If the renovation loan has the concrete for that entrance to be as a part of the transaction, because remember, it's one loan, then you're now not just getting enough to put in the fixtures and all the stuff on the inside. You're literally changing the you're not changing the footprint. You're literally changing the motif of the property by having a whole concrete basement entrance.
Yeah, it changes everything. It's going to be a really popular product here, especially coming to Utah. And the last thing, rental income. This is my favorite. Rental income is allowed for qualification on the choice loan, 75%, and 203K, 50% here. So and
that's not always been that way. So we'd like to think California and other states that were more aggressive with their ADUs in the first place, that brought the national lending circuit on to that, because that was my biggest problem. I felt like Chicken Little or the Boy Crying Wolf years ago, because we weren't able to solve that problem. And it's important to note that and I'll give you an example. So I've got a piece of paper here that shows that Davis County had a home ownership assistance program. Remember when they rolled that out?
Yeah.
They had so much money and they broke down the requirements on it. It must have 80% below the median income and had all these different requirements. The state of Utah infused in a special session additional monies for first-time buyers or helping people qualify. That's kind of all going away. In this year's legislation, the focus is not on how can we interfere with the financial markets and give PUE money or EIDL money or PPP money. Yes, we have a housing crisis, but let's not exacerbate the problem by giving people the money in a welfare type of a state. And so the legislature, while still trying to make housing affordable, they're focusing now on the zoning, which brings us right back to our ADU.
That is where you're empowering them. You're seeing new builds even out in Utah County, new builds with ADUs. So phenomenal product. We got to wrap this up here. Kelly, this has been great. I appreciate it so much. Last thing I have for you, how can we reach out to you about this? Because you are becoming an ADU expert. What's the best way to get a hold of you?
I guess call Kyle.
Call Kyle, and
I'll be out on the campaign trail.
Congratulations. You're on the campaign trail. We're rooting for you.
Thank you.
Appreciate it.